Right, income statement question 1. This looks like it's really very easy, but it's in fact one of the hardest questions on the paper. It is not surprising that you got this one wrong. So we've got a sweet manufacturing business and we need to identify an overhead. Now, the term overhead means a cost for the business which is not related to production. So if we look down the list, we can immediately eliminate raw materials for making sweets because that is not an overhead, it's a cost of goods sold. We can also, if you look at A is really unpleasant. The wages are paid to the staff for making the sweets, so they are relating the staff to the sweets, so therefore it is not an overhead. That leaves us with B and D. D, purchasing a new van, you think a van is an overhead. Unfortunately, in accounting terms, it's not an overhead, it's an investment for the business. It's a really technical, horrible point that would flummox a lot of people. The correct answer is B, electricity used to run the machinery. Now, I know this is difficult and you just have to think it through and pick the most logical answer for it. So if we come on to the second part, so be clear in your mind, an overhead is a cost that a business pays which is not directly related to production. We might call this an indirect cost. If you see below, indirect costs, overheads, expenses, fixed cost all mean the same thing. So try and think about what would be an overhead of this school, an overhead of a pizza delivery business, or an overhead of a taxi company.